There is so much opportunity out there for Indigenous-owned businesses, Indigenous communities. And to capitalize on that opportunity, there are also some hurdles, right? There's the hurdles of geography, there's the hurdles of the legacies of history and colonialism, and there are the hurdles of financing. On that latter question of how do you finance this kind of opportunity, there's a new initiative, a new offering here coming from BMO. It's called an Indigenous Bond. And we're going to talk about what that is, what it means, how it works. Our guest is Jonathan Hackett. He is head of sustainable finance at BMO, and he joins us now. Hello there.
Hi, Bruce. Thanks for having me.
What is an Indigenous bond? What does that phrase mean?
Yeah, so an Indigenous bond is a type of sustainable bond. So it's a bond that leverages these tools we've created for acknowledging the work that companies do when they're either doing green or socially beneficial activities. And it allows the investors, typically institutional investors that buy the bonds from those companies, to look for impact alongside financial returns. So an Indigenous bond specifically is a bond that takes Indigenous focused use of proceeds, whether that be money spent supporting Indigenous entrepreneurs, Indigenous procurement, or money, in our case at BMO, lent to Indigenous communities, Indigenous led businesses, and have investors invest specifically in a bond that's tied to the impact that comes from those initiatives.
How do investors think about the return on a bond such as this versus a boring old corporate bond or municipal bond or something else that they could just buy off the shelf with no concern for whether it has an impact or not?
So it's really funny. I used to have a lot of conversations with investors around this concept of a greenium, the idea that if you do a green bond or a social bond, that as an issuer of that bond, you should get a better price on that debt, that you should get essentially a discount on your borrowing. And I always have expected investors to be very hard nosed, solely focused on returns and say, look, we have these mandates and there's absolutely a greater focus, but it really is about supply and demand. That there's just such greater demand for these bonds. And therefore, we understand that in order to participate, we have to pay a better price, that we have to give you a discount, and that's where the greenium comes from. And to some extent, that's true. These kinds of bonds are really in extraordinary high demand. They're also ones that trade less often. People hold them rather than trading them in secondary markets. But there's this other weird thing that a lot of investors also just acknowledge and say, well, we should give a better rate. We have a dual mandate. Our investors are giving us money specifically to achieve those goals. Or if we're, an insurance company or a pension fund that has long-term goals, our goals are aligned to the impact objectives. And so we are actually getting something else out of it. And so we've seen an acknowledgement from investors that they might just be willing to pay a different price because of that dual impact structure.
What are some of the projects that the proceeds of those bonds would be used to fund? And you can give us all sorts of examples. I'm sure the diversity of projects is quite broad.
Yeah. So in some ways, my work working in this case with BMO as my client, despite working for BMO, I had an embarrassment of riches. BMO has an Indigenous banking unit that has been in market for 30 years that really reflects BMO's desire to work differently and to find solutions that reflect the specific needs of Indigenous communities and the needs to deal with the legal structures that have been created in our country around how Indigenous communities can borrow and can interact with a company like BMO. And so, the loans that feed that bond really are a mix of loans to businesses, Indigenous owned businesses that our IBU partners with our commercial bank to go out and lend to. But it's also things like infrastructure to support, either communities on reserve or other Indigenous communities where that, infrastructure supports building new housing, supports expanding community centers and other initiatives that the community might engage in directly. And then the last part is also, we've had this great work over many years around on reserve home lending, just because if you think about ownership structures and the collateral that's necessary for a mortgage, we as a bank can't ask for and perfect collateral the same way you could on reserve as you could off reserve. And so we've had these partnerships essentially with Indigenous communities to lend into those communities in partnership with the governance around them.
What What has needed to change or be expanded in terms of your paradigm for risk? Because, as you say, the complexities of on reserve investments have, like, there's a whole bunch of nuance there. So, how did you need to kick the bankers out and bring in an entirely different group of people to work through this challenge? Because it doesn't fit a lot of the box ticking that a regular finance person would at least think about.
So it's funny, there's a parallel I find between our work with Indigenous communities through our Indigenous banking unit and a lot of the work I do on clean energy or on work we've done with the energy retrofit program we created with the Canada Infrastructure Bank. And that's that it's not taking on new risks. It's not taking on a different attitude towards risk. It's doing the work. The work is often whether it's building a structure that does manage the risk effectively for everyone involved, or whether it's understanding the needs of a community and specifically what their situations are. That's the real work. Our Indigenous banking unit will proudly talk about the very low loan losses that they've had throughout their history. That is a business that has in some ways been very low risk, despite the fact that the initial premise was, well, we can't use the same tools that we use to manage risk everywhere else because of the different issues around ownership or collateral. But the end result really isn't saying, oh, we're going to just go throw caution to the wind and get a different risk outcome.
Mm,
It's really been actually a superior risk outcome in a lot of these
mm,
products. But the key is that it takes real work. It takes understanding. It takes thinking about doing things differently. And so it's not easy. It's not something that just happens if people say, oh, this is great, I want to go pursue this. But it is one that if you put in the effort to understand and to put in real effort, you get a differential outcome. And that's
mm.
something that's really valuable for us.
You mentioned green bonds. Those have been available to retail investors for many years now. Can retail investors participate in Indigenous bonds? Can they put it into their portfolio?
So yes and no. So there's no structural reason why not, other than lack of supply. The reality is that, as I said before, a lot of these bonds don't trade very well on secondaries. I shouldn't say trade very well. They trade very well, just not often. People
Mm.
hold them. People don't are loath to let go of them. And so the best way to get access to these is usually through a sustainable bond product. A fund manager that is saying, look, I will build for you a bond portfolio that will include differentially sustainable bonds. And then I will go into these kinds of transactions and buy a larger share of them than I normally would and distribute them disproportionately into my sustainable bond fund. So those products, a lot of them are already out. We have them, any other organizations have them. Those are the kinds of organizations that buy these bonds. And so if you buy one of those funds, you will get access to them. But actually going out and purchasing an individual bond is pretty
Mm.
difficult, just given supply and given how well kept that supply is.
These ideas have been around for a while. This is what you do for a living. So, you're intimately aware of how these things work. So, said with great respect, what took you so long? Like, this seems like an idea that's like, well, why didn't BMO launch this a decade ago?
So it's interesting. So one is, the question of how many different things do you want to push on, right? How many, we have Indigenous assets, loans to Indigenous communities that have been part of our sustainable bond program writ large. The question of why do a specifically labeled sustainable bond that is just for Indigenous lending is one that really has two parts to it. One was just data. The reality is, in order to issue a bond on a standalone basis, we need to make sure that we have a sufficient number of loans that we can cover the full length of that bond, the full value of that bond, and never kind of be undeployed, if you will. Um, and that includes replenishment, because a lot of our loans before that we would have excluded in an easy screen are still long-term loans, but they're just renewed every 2 years. And so
Mm.
one of the questions is the confidence we have of our ongoing relationships, of the length of those relationships, that even if it says, hey, this is a 2-year loan that we renew every 2 years over and over and over again, that we have the mechanisms to show that track record, that portfolio will continue, that those renewals happen, and that we continue to be a bank for those communities that they want to continue to work with. The other reason is actually the impetus of working with a lot of clients that are very focused on partnerships with Indigenous communities and asking, how do they access this market? And having a conversation with the client where they said, well, what other Indigenous bonds have been issued? And our answer is, well, we've issued bonds that include Indigenous assets. We can do this. And they say, well, but why haven't you then? Right? Like, why are we going to go out and be first if you guys could do it just as easily? And so partially the answer was to say, oh yeah, we could.
Right.
We really could be a signpost to some of our clients. And, we think about the Indigenous banking unit as a great differentiator at our bank, a great business. The reality is, if you think about all the infrastructure that needs to get built in this country in the next, 10, 20 years, all of that requires Indigenous participation, Indigenous engagement, Indigenous equity participation. And so helping our clients see how much capital is able to flow into those opportunities is something we think is very valuable to be out there with.
The broad conversation about ESG has changed dramatically in the last 2 years or so. People will listen to this interview immediately after it airs. They may listen to it 2 years from now. Who knows? How would you characterize the moment that we are in today in 2025 as it relates to ESG, and acknowledging that it is different from what it would have been 2 years ago?
So it's interesting. I've been in this job for 6 years. And, when we started the team at the current incarnation, there was this question of, is this the right backdrop? There is some pushback on a lot of these concepts. Is it really going to spread adoption? And we are in a very different space now, where so many of the things that we used to argue about of, do climate risks matter, or, how much does governance play a part, are both completely accepted as backdrop and mainly attacked when they're combined into 3 letters together rather than individual concepts, right? If you have a company you're investing in that is constantly under threat of strikes, that's a challenge. That is a legitimate challenge that you wouldn't say is non-financial.
Right.
You would say it's a threat to the core business. And so, yes, there's absolutely pushback on certain concepts. And the pushback really is on the question of materiality. And the reality is that of all the things we talk about within ESG, so many of them are clearly material. And it's really only when we combine all of it indiscriminately into one category that people really can attack it and say, well, not all of this is fact-based. And
Right.
so we like to think about working with our clients around where are the most important, impactful pieces of a huge world of ESG, and how do we help them focus on those things that increase access to capital, maintain their relationship with investors, and lead to the best outcomes for their businesses.
Interesting. Really interesting. Jonathan, thanks for taking the time to talk to us today.
Thanks for having me.
Jonathan Hackett, Head of Sustainable Finance at BMO. He was here to talk about the launch of their Indigenous Bond.